At this point, it is safe to say the bear market is here. Bitcoin is down more than 50% from its all-time high, and most altcoins are down 80, sometimes 90% from their all-time highs. And Terra Luna, let's not even go there. So, what is the best course of action to take right now? First of all, put aside all those feelings of panic, anxiety. Be very rational in your thinking. That's first of all. Second of all, take a look at this clip by one of the all-time investment gurus, Warren Buffett.
I'm wondering if you would give us a clue as to what your strategies are going to be if it's really true that the market gets dismal over the next few years.
Well, if the market gets cheaper, we will have many more opportunities to do intelligent things with money. Now, whether we'll blow on the money in the meantime or something is another question. But you know, we are going to be buying things, one thing or another, operating businesses, stocks, high yield bonds, whatever. We're going to be buying things for as long as I live. Just like I'm going to be buying groceries.
Longer than that, Warren.
Yeah. Well, yeah. Charlie's just waiting to take over after I. And I'm going to be buying groceries the rest of my life. Now, would I rather have grocery prices go up or down if I'm going to be buying groceries tomorrow and next week and next month and next year? And the answer is obviously, if I'm a net buyer, I will do better if prices are lower.
If you take a look at all the successful traders, what they'll tell you, contrary to popular belief, is that they made most of their monies, or at least they made the plays that led to most of their wealth during the most violent points of bear markets. This works the same way, whether you're talking about traditional Wall Street stocks or cryptocurrencies. But buying low during a bear market and selling high is actually only one of the tactics that we're going to be discussing when it comes to strategies and opportunities you can employ during a bear market. There are actually 3 more strategies that can very much help you stay afloat during the depths of the bear market and can really turn things around. And that's what we all want to be. We want to take advantage of opportunities and become bear market millionaires. Guys, in this video, we are breaking down 4 strategies that you can put to use right now. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. We are a crypto investment research company. We have documented many 100x returns on coins and tokens that are top projects today, really before anyone else was even talking about them. And if you want to see our detailed process for researching such projects, then our new and improved Altcoin Buzz Access group is for you. Our plans start at $99 monthly. Be sure to click the link below for more information. Just keep in mind, things are very, very turbulent right now across all kinds of different asset classes. So just remember that we're providing our own opinions here in this video, but nothing that we share information-wise should be considered official, financial, or investment advice. Just before we talk specifically about these 4 strategies that we're going to be outlining in this video, it's first important to take a macro level perspective and assess your portfolio. Setting up the right portfolio is important. This is the fundamental aspect that all traders build upon, and it's critical because you set the foundation for the next bull market when that does take place. So now is very much the time to set a strong foundation. You got to be a contrarian, right? You got to buy up assets when blood is running in the streets. And going back to Warren Buffett's advice, be greedy when others are fearful and be fearful when others are greedy. Everybody else is fearful right now. So now is the time to be greedy, not to an extreme degree, but you do want to get your ducks in order. Now is a good time to do so. Because once that next bull market arrives, there will be new all-time highs. However, be aware that some projects will not survive the bear market. And here you can see a picture of a few sample portfolios. We made 3 different samples ranging from low all the way to high risk. Low risk means that 40% is in stablecoins, good stablecoins like USDC and DAI. The rest is in blue chips, 45% in Bitcoin and Ethereum to HODL. Solana, ADA, and AVAX, Avalanche, each allocated at 5%. Then we have medium risk. It's like the low risk portfolio, but with 3 medium risk tokens added, FTM, Rune, and Matic, and the percentages have changed just a little bit as well. Finally, we have a high-risk portfolio. This is like a medium-risk portfolio, but with the addition of 2 high-risk tokens, Star Atlas and Immutable X. Once more, the percentages have shifted around, but just a little bit. It's more a question of what we're including in the portfolio. This may not have all the projects that you want to see reflected in your portfolio, but that's okay. That's not the idea here. We're not suggesting that we must select these particular projects. I mean, those are a little bit interchangeable, but the idea is you're moving from very stable projects at a lower range risk portfolio to ones that are a little bit more speculative, depending on what those may be in your opinion. And that does become a little bit subjective. Let us know in the comments below what you'd consider to be low, medium, and high risk in the crypto space. But what's most important is to position yourself in the right way. And there's a certain logic to follow. First of all, figure out how you like to balance your portfolio, what stable, low, medium, and high risk coins or tokens you'd like to add, and then choose the projects accordingly. For the low and medium risk projects, they are mainly L1 chains. And when you select higher risk projects, you can decide where you want to put your money. So just keep in mind that small cap coins are risky in a bear market. There is a chance that they may not survive. Hence, blue chip coins are a safer bet for now, in our opinion, since they have better funding, more longevity, more experience, more of a track record. And furthermore, they have most likely more adoption as well, very importantly. It's also important to keep on top of your portfolio, manage and adjust wherever and whenever it's needed. In other words, replace coins or tokens when you think the market conditions may call for it, may warrant it. You need to play this proactively because during a bear market, sitting back and relaxing is not the way forward. You can decide for yourself what kind of portfolio is right for you, but with that out of the way, let's now dive specifically into the 4 strategies we want to employ during a bear market. Beginning with strategy number 1, stablecoins. Stablecoins to the rescue, actually, as long as we're excluding UST. This is an important one. So the first option to look at, stablecoins, really despite all of this ongoing Terra Luna drama, it's a valuable strategy. It's still a good move. By the way, if you're curious to know exactly what happened with Terra Luna, check out this video. We break it down, the whole fiasco, in all its bloody, gory detail. But coming back to the point here, the bear market is really the time to invest in stablecoins, even as high as 50% of your portfolio. Yeah, we know it's not necessarily the most exciting option, but they're exactly what they say they are, stable. And that's why you need this in any portfolio, especially in a bear market situation. You don't want or need another loss of 70 to 80%. So consider taking some profits on your stable coins instead. Let's outline how we can make a profit on a stable coin. Before you find yourself in a bear market, don't forget to take profits, first of all. And once you, let's say, double your investment, take the original investment out, and now you've effectively made 100% profit. You can put your original investment for 50% in stable coins and the other 50% in blue chip coins, such as Bitcoin or maybe Ethereum, and that's something that you're going to want to hold. There are many different strategies you can follow, and we post about many of these, of course. Farming is a great way to earn passive income on your stablecoins, and some farms, by the way, as you guys probably know, offer up to 35, even 40%. From your yield farming, turn some of those profits back into stablecoins as well, because first, you're going to earn more tokens when the price is down, and once the price goes up again, hopefully you've doubled your gains, or somewhere in that ballpark. You've accumulated more tokens, and you get a higher price now. To find the best yield farms, you can check out the CoinDix site, which is shown here. This is a great resource that we highly recommend. Of course, it's also a good idea to subscribe to our channel, Altcoin Buzz, as we are always on the lookout for passive income opportunities. But just remember, and as you already know, stablecoins are not 100% without risk. And after the UST fiasco, if you're confused which is the safest stablecoin, check out our recent video on the subject. Our second strategy is even more fundamental, and with a little clairvoyance, it's especially profitable. We're talking about simply buying the dip here. Buy the dip. You've heard it before. Buy the dip. Sometimes it's hard to do, but really in the long term, it's one of the best things you can do for your portfolio. But when and where does the dip stop? That's the crucial question. And look, to tell you the truth, nobody has that crystal ball that allows them to know for sure what's going to happen in the future. That's That's why dollar cost averaging is probably your best bet. Dips can be like a falling knife. You've probably heard the expression. And you'd probably not want to try to catch a falling knife. It's going to be bloody in most circumstances. In other words, you don't know when the dip is going to reach rock bottom. Another aspect to consider is that not everybody has endless deep pockets and infinite dry powder. At some point, at some stage, there can be a dip, but it's very possible that you've run out of money either on the last dip or several dips ago. So again, a good option for you is DCA or dollar cost averaging. Instead of going in with a big wad of cash in one specific instance at one specific time, take that money and spread it out, maybe over several weeks or even several months, depending on what your cash flow looks like. This way you can spread your risk. And if things do continue to dip, you'll have a little bit of extra cash, extra money available to avail yourself of that opportunity. And on a regular basis, you can add money to your portfolio, really regardless of the current price of that asset. You can follow a similar trading strategy when taking out profits as well. This is not only beneficial in the long term, but it's also a disciplinary behavior that you're going to adjust to, that you're going to enjoy as long as you're strict, as long as you adhere to this rule that you set for yourself. It's going to benefit you again in the long run. And irrespective of market state, at some point we all feel confused whether or not we should be buying or selling. And if you're the kind of person that wants to go beyond DCA strategies and just buying the dip, you may want to check out Altcoin Buzz Access. You are going to be overwhelmed with all of the high quality, technical, actionable information that this service provides. Check out the link in our description for more info on Altcoin Buzz Access. Strategy number 3 to consider is non-crypto active or passive income. And this is going to help you to stay afloat in a bear market in a non-crypto perspective. Yes, having passive income and especially a stream outside of crypto is a pretty good and a pretty smart thing to do. This all goes back to diversification, really. Look into having more avenues of income. In other words, widen your investor's mindset and your horizon. Spread your investments in various sectors. You can look into a variety of options. You can invest in traditional stocks, bonds, real estate, cash value life insurance, derivative products, cash itself, foreign currencies, precious metals, gold, silver, platinum, others, and even annuities. And you can also move forward in your current position at work. You can ask for a raise, a higher salary. You can switch careers if you so choose. I mean, this sounds like vague or general information, but it's something to consider if you want to grow your revenues. You can also cut down on your expenses. Furthermore, in the crypto space, there's a high demand for resources. This is the active part of income outside of crypto. And as a plus, crypto jobs tend to pay very well. However, this will also depend on your qualifications. But the good news is that Web 3.0 is a calling because there are many courses out there and plenty of them are for free. There's a lot of demand right now for people that are technically able in that Web 3.0 space. And finally, bear market strategy number 4 is to deep dive into DeFi. Why not? Because during the bear market is when you should put the hard work in. What hard work are we talking about? Well, you want to set everything up in such a way that once the bull market starts, you can take profits. And that's the time when you can relax and kick back once the bull market begins. But not until then. You got to be working until that bull market kicks in. For now, it's important to stay updated in DeFi. And in all fairness, that's not always the easiest task. However, once you put the time and effort in and figure it out, the rewards are there and they're going to be well worth the time you've invested. Moreover, it's quite likely that new DeFi strategies will be even more complex. That's why the critical work on your basic knowledge must start now. You guys should always be checking out altcoinbuzz.io for the latest publications. There are quite a few useful guides and many more that are going to be coming in the pipeline when it comes to all things DeFi. So keep checking out the website. It is a resource that is there for you. There's just so much that we've written about when it comes to DeFi strategies. This includes articles about stablecoin farming, yield farming, various reviews and how to get yield at a wide variety of protocols and platforms. And so it is well worth looking into our vast catalog when it comes to DeFi and yield farming publications. We explain strategies in detail, and oftentimes we also have how-to articles about the topics that we cover. Furthermore, whether or not you choose to tap into the website as a resource, we encourage you to work with others. You can start or join, whether it's Discord or Telegram groups with like-minded people. Have discussions and learn with and from each other. That's very important because figuring out really, let's admit it, complicated projects or complicated strategies, that task is always easier when others are part of that conversation. And to sum up a lot of the points that we've made today, here's a great list of what one ought to do in a bear market. First of all, make a plan and stick to it. Have a long-term mindset and keep believing in yourself. Turn off the dollar value tracker on your portfolio because during a bear market, you want to avoid looking at that dollar figure. It can get a little bit depressing. You're in it for the long haul, not the short-term gains. Also, keep track of your token count. You need to know how many tokens you've earned from staking. That's very important. And guys, use DeFi Llama to keep track of the various TVLs of the protocols you follow. And confirm your staking strategies again and again. If you have doubts about a protocol, then move your tokens. Stake as many of those tokens as you possibly can. And if you can't stake a token, make sure you are 100% behind this token when hodling. Choose a staking scenario that suits you best, a bullish, a bearish, or a neutral scenario. There are different strategies there. And don't use stablecoins on reward tokens. Stake to earn only. Stables are of more value to you during volatile bear markets and volatile times. And use your rewards only, not investment, for the hardest hit tokens. The tokens with the least losses, use these to buy tokens with the biggest losses. So here we are at the end of this video. We hope that we were able to give you some useful insights on how you can really stay afloat, not only stay afloat, but be profitable long term and take advantage of these moments during the depths of the bear market. We came up with 4 solutions that really can make a difference if you're patient. These options will ask you to invest time and, most importantly, do yourself a favor as well in the process. That is, to do your own research. Never financial advice, guys, but genuinely best of luck if you do choose to invest. Remember that genuine wealth is truly made at the most dire, at the most depressing depths of bear markets. So hopefully these strategies can work for you. If you're still watching this video and if you've enjoyed it, be sure to like, subscribe, share, hit the bell to receive notifications as well. That way you never miss publications and video content that we release, the YouTube channel, Altcoin Buzz. Check out these other couple of videos that should be popping up right about now. Stay safe out there, members of the Altcoin Buzz Army. And as always, we hope to see you again soon in our next video. Take care.